Welcome back, guys, to another video. And in today's video, we're sharing with you guys a simple yet effective strategy. If you're a beginner trader, intermediate trader, this video is very important to you, so stay true to the end of the video. So let's dive into the charts. Whenever I want to analyze the market, to start from the high time frame, basically the weekly time frame or the daily time frame, but preferably the weekly time frame, so you can see the overall market direction and we can be able to spot our key levels. So we can see we had a level at this point on the weekly time frame on which the level bounced up from. The market acted as a support at this level, and the market came back to test this level and bounced up this level. So we identify our important levels in the market and also spot our support and resistance levels. So we have these levels or resistance level basically, because you can see the market reacting from this point, selling off from this zone, broke below this level and retested it, acted as a resistance, then dropped downwards. Now the market pushed back to this level and sold off from this zone. Now the market is approaching this level, so let's head down to the daily time frame. So in daily time frame, you can see the market is approaching this point, approaching a resistance level. So what is this strategy? How do we approach the market at this point? So firstly, we identify our market trend, our current market trend on a daily time frame, which is an uptrend. As you can see at this point, market is pushing to the upside, creating higher highs and higher lows. If you guys don't know what higher lows are and higher highs, you can see the market created a low at this point and another low followed up. If you guys can check, these lows are not in the same line. This particular low is higher than this low, this previous low. Then we had another low, a higher low, and you can see this previous low we had is not higher than this low. Instead, this recent one is higher than this low, and the formation makes the market move to the upside. As you can see at this point, the market is trading to the upside, is moving on an uptrend, and at this point we had a high at this point, then we had another high that followed up. This high is actually higher than this high, and we had another high as well. So you can see the market pushing to the upside, going to retest this level. So how do we approach this market? What's the strategy that we use in trading this forex market? What's this simple and effective strategy? What's this market approach that's very profitable as a beginner trader or intermediate trader or someone who has been trading for some time now but is yet to make profits? And so let's go to the 4 hour time frame. So on the 4 hour time frame, you can see the market is creating levels. We have levels at this point. You can see the market is doing what, giving us a push at this point. Then I see the market giving us a kind of a channel at this point. After the channel formation, we had a level at which the market broke above and came back to retest. That's this level. You can see the market gave us what, a move at this point, broke above this level, then came back to retest it. Then you can see the market pushing to the upside. So how do we approach this market on the 4 hour time frame? You can see we had the market give us this break and retest of this channel. What we do is to set our entry to, we place our entry to, then we move our stop loss below this market, the previous market low. You can see the previous low the market created at this point, so we move our stop loss below it. So as you can see how far the market went, because we have already identified the overall market trend. Then you can see we took advantage of this downward channel and traded the break and retest of this descending channel as well. So what next do we do, or how do we approach the market next? What's the next thing we do on how we have gotten this our buy position? So how do we approach the sell trades? You can see at this point how the market is giving us what, so the market gives us an ascending channel at this point. Then you can see the market doing what, breaking below this ascending channel and giving us a retest at this point. So what's the next thing we do? We enter our shorts, we place our shorts to sell this market back to this our trend level. You can see our trend support at this level, and on a trend line we have our support and resistance levels. This level is the resistance level and this level is the support level. You all can see whenever the market gets to this trend, it bounces off this particular trend, and whenever the market gets to this level, it bounces off this level. The same thing happened here. So it's telling us that this level is actually an important level in this market. This trend level is a support level, so we place our target level to our support level because we'll be expecting the market to bounce off this level. So our stop loss will be above these recent highs. See our recent high at this point. We had our recent high at this point, so our stop loss will be above it. Our stop loss will be above this our recent highs. So what's the next thing to do? We've caught our sell at this point. We've caught our sell trade at this point, and we caught our buy trade at this point, and we caught our sell trade at this point. You can see how the market give us a sell off from this level. We are just taking advantage of the market trend, and we are taking advantage of the structures, the ascending and descending channels we find in them. So what next? We can see we had another ascending channel formation we had at this point, a descending channel basically. So let's identify the descending channel. So you can see the market give us what, this channel formation to come give us a test of our horizontal support and our trend support. So see our horizontal support at this level. We had a horizontal support at this level. You can see the market bouncing off this level, doing the same thing, rejecting at this point, dropping. Level acted as a resistance at this point. Here it acted as a support, and basically the market finally broke above it, coming back to retest this level to form a support, to give us a support confirmation with this our trend support. So with this our trend support, so let's get into the trade. How do we take our buy position? Because I've already seen the market's direction. The market is pushing to the upside, so we place our target level at this point, then our stop loss below our previous low. So you can see the market pushed up from this level after then. So, and we had a recent channel formation that the market created. We had the market creating this descending channel at this point. Then the market finally did what? Broke above this our descending channel. So how do you approach this market? Remember, the market gave us this descending channel that approached our trend support at this point. The market approached our trend support and our horizontal support. The market at this level acted as a resistance at this level, resistance here. Finally, the market broke above this level and tested it. Then finally gave us a channel, a descending channel formation, a descending channel or a falling wedge. This is basically a descending channel or a falling wedge formation. So the market gave us this formation and gave us a nice push out of the level, out of the formation. You can see if you're able to get our buy position at this point, then we'll be having our stop loss below this previous week at this point. See our previous low at this point. So we'll be having our stop loss below this level, then you'll be seeing our target level at our trend support at this point. So you can see how far the market's pushed when it's broke out of this our descending channel. So basically, let's go to the lower time frames to see if you can identify lower time frame opportunities, because this is basically a forward time frame. Let's see if you can see the same formations on the 15 minutes, the 5 minutes, and basically 30 minutes time frame, or the 1 hour time frame. So let's head down to the 1 hour time frame chart first. So on the 1 hour time frame, you can see the market give us inside this our downward trend we had at this point. You can see the market giving us what, descending channel at this point, a descending channel formation, and finally the market broke above this our descending channel, giving us a nice move to the upside. You can see then if we're able to get our buys at this point, our target level at this our trend resistance level, then our stop loss basically at this point, we're catching good buy trade at this level. So let's look out for another formation as well. So we had a descending channel at this point as well. On the 1 hour time frame, you can see the market giving us this descending channel or a falling wedge basically. So we look out for the breakout too. Whenever we see a falling wedge pattern, something of this kind, whenever I see a falling wedge, something like this, then basically look out for buy opportunity to the upside. And whenever we see a rising wedge, basically whenever we see a rising wedge, something of this kind, a rising wedge basically, look out for a break to the downside, retest, then a sell trade. So these are the pattern formations, these are the market approaches we use, and they're very effective in trading the forex market. So you can see how the market give us this descending channel, then finally a breakout of this channel. Then if we're able to get our buy trade at this point, then our stop loss below this previous low, then you can see the market's pushed far from this point. Maybe our target level will be at this our resistance point, this level be our target level, basically our first target level. So you can see the market bought and went far from that level. So that's it, guys. Hope you guys got my explanations, my analysis, and all of that. So if you're a new viewer, please do it to subscribe for more videos like this. And to my returning viewers, shout out to you guys. You guys are the OGs. Let's keep doing what we do, guys, and do have a wonderful day. Peace out.